Dr. Mariappa, sir.
Ah,
Respected Principal, sir. Dr. S. Anil Kumar, sir, SSMRV College. Participants from various colleges, my dear colleagues. On behalf of Bangalore City University, Buktam, and SSMRV College, I would like to welcome all of you for this 2 days orientation program on fifth semester. And today the topic for discussion would be advanced financial management. Today we have an eminent resource person, Dr. Mariappa sir. I would now like to invite Professor Vijay Lakshmi madam to introduce the resource person.
Thank you, Ajay sir. Good afternoon, respected audience. Today we have Dr. V. Mariappa sir as our resource person for syllabus orientation of the subject Advanced Financial Management. It's my honor and privilege to introduce him to the august gathering. Dr. B. Mariappa sir qualified with MCOM, MBA, ICWAI, MPhil and PhD, presently working as Associate Professor and Head of the Department of Commerce, BMS College of Women, Bengaluru. He is a hard worker, popular personality and an established commerce teacher in Bengaluru. He pursued doctorate degree on the topic Impact and Effectiveness of Activity-Based Costing in Indian Manufacturing Industry, an empirical study. His contributions to the field of research is enormous. He presented and published various research papers in leading national and international journals. He has been invited as a resource person for various workshops, national level seminars, and international conferences. Sir has got expertise knowledge in the field of commerce and management. He authored many books on various subjects like financial accounting, management accounting, cost accounting, taxation, and information system and the like. Sir, once again, warm welcome to you. Kindly take over the session. Happy learning to all the participants. Over to you, sir.
yes.
Thank you.
Second, welcome, Dr. Mariappa.
So first of all, I would like to thank principal, management, and staff members of SSMRV College and also Commerce and Management Forum for giving me one more opportunity today to share my knowledge in the subject called Advanced Financial Management. I think all of you will agree this is one of the subject most of the teachers are facing lot of problem in teaching this particular subject. And of course, this subject will be there for this year and next year. So today, we all discuss in detail, each chapter so that we for this year and next year, of course, this will be there only for 2 years. So we will decide what are the things to be covered in each module so that and not only that, and many teachers, they approach it many times, they are not getting the required material for some of the units. So my job is to make you, all of you, to understand what to teach in each unit, and I will try my best to help you where to get the materials for each unit. So look into the first unit of Advanced Financial Management, Introduction and Fundamentals of Finance. And many teachers have the doubt, and I have seen some textbooks where they have written wrongly. So let us all discuss today, and we will come to a conclusion what you are supposed to teach in case if it is already covered, and what else you can do in the class for this particular unit. See the first unit, Meaning of financial management. No doubt they have studied financial management and goals of financial management, but when you're teaching advanced financial management, you need to repeat this. So all the teachers try to remember this. You must teach what is financial management, definition of financial management. You can also give some brief introduction like meaning of finance, meaning of business finance, meaning of finance function. Then you can come to meaning of financial management and goals of financial management. When we say goals, teachers, remember, you need to teach the objectives of financial management. So the objectives, you have to divide them into two, basic objectives and other objectives. So the basic objects of profit maximization and wealth maximization. These two goals are to be covered in detail in the class so that in the examination, they may ask questions on, that is, even for 2 marks also, mention the goals of financial management. What is profit maximization? What is wealth maximization? So like that, the questions may be framed on the goals of financial management. So this is meaning of finance, meaning of business finance, finance function, finance management, meaning, definition, goals of financial management in Unit 1, first part. Coming to the second part, analysis of financial statements. So this is what I just mentioned now. In some books, they have brought the management accounting here. So don't teach management accounting here because we have this management accounting in the coming semester. So for time being, you just teach them according to Companies Act, Schedule 3 of Companies Act 2013. The students must know the meaning of financial statement and meaning of analysis. When we say financial statements, you need to tell them 3 things. One is 4 items like statement of profit and loss, balance sheet, statement of changes in equity, and cash flow statement. Just meaning and meaning of financial statement. Don't go in detail. Don't go in detail. And again, the analysis. When we say analysis, presenting these financial statements to the management in an understandable manner. So my request to all the teachers who are handling this subject, just cover meaning of financial statement and meaning of analysis of financial statement. In case if you want little more, you just mention what are the techniques used for analysis. Like comparative statements can be used, common size statements can be used, trend percentages can be used, fund flow can be used, cash flow can be used, and ratios can be used. You just stop at this stage. Like what are the techniques one can use for analysis of financial statements, and don't cover any problems on these statements. So coming to the last one, ratio analysis, there the continuation of ratio analysis is DuPont analysis. So like in ratio analysis, we calculate so many ratios. And each ratio is meant for different purpose. So now here in ratio analysis, we have a technique called return on equity. We have a ratio called return on equity. Return means profit. So now any company, tomorrow if any student after completion of their graduation, if they join any company, their main aim is or goal is to maximize the return to equity shareholders or owners of the company. In order to do this maximizing the returns to equity shareholders, what are the things to be? What are the interrelated links to increase the profit and also to increase earning to shareholders? So this analysis is called DuPont It is invented by that is a DuPont company of USA. So here, once again, no problems here. Just what is DuPont analysis, only concept. And coming to till now, we discussed only the theory aspects of first chapter, Introduction to Fundamental Tools of Finance. Now we actually the practical aspects. No doubt they have studied this in third semester, namely time value of money, compounding techniques, discounting technique, annuity, perpetuity, etc. But still, since it is included in this unit, you teach them time value of money, time preference for money, and how to find out future value of single flow, how to find out future value of uneven flow, how to find out future value of annuity. In the same way, present value of single flow, present value of uneven flow, present value of annuity. So these are the practical aspects to be covered. These are the practical aspects to be covered in Unit 1. Now coming to the other practical aspects of. So of course, in the third semester, in the financial management, this weighted average cost of capital was not there. So otherwise the financial management becomes, because the cost of capital is very important in financial management for taking any decision, like in especially capital budgeting decisions. So how to find out cost of all the sources put together? This is what is called as weighted average cost of capital or overall cost of capital. So this is a very important one. In the classroom, you need to cover this weighted average cost of capital in detail. So now you may ask where we will get the problems for this. So if you look into the previous corporate financial planning, corporate financial planning, 6th semester become question papers. If you refer, you will get lot of problems on how to calculate weighted, that is problems and weighted average cost of capital. So I told you this is BCom 6th semester corporate financial planning. In that subject, you will get problems on weighted average cost of capital. I'll give you one more clue. Like last year, there was a subject called Advanced Financial Management for BBA program. So there, I have written a textbook on Advanced Financial Management for BBA program. We had Advanced Financial Management BCom as well as BBA. So if you refer the BBA book, you'll get lot of problems how to calculate weighted average cost of capital. So you can refer either my book of BBA, or you can refer corporate financial planning question papers, or BBA question papers of 5th semester advanced financial management, so that you can cover in detail the weighted average cost of capital. So coming to capital asset pricing model, you just restrict here just for theory what is capital asset pricing model and how to calculate that beta, and how to calculate expected earnings. Just simple problems on CAPM model. So with this, I think the first chapter, let me conclude the last one, unlevering and relevering. I think all of you know, levering means using debt capital in the capital structure. So unlevering means if you redeem the debt, the company will become unlevered. And when you issue some more debts in order to increase the capital or in order to increase the resources, financial resources of the organization, it is called levering. That means using redeeming debt is called unlevering, reissue of debt is called relevering. So this is only concepts you can teach. So with this, the first unit, I'll just conclude. Need to teach them about financial management, goals of financial management, meaning of financial statements, analysis of financial statement, concept of DuPont analysis, completely theory, time value of money, compounding means future value, discounting means present value, and problems on these two, problems on weighted average cost of capital, simple problem on CAPM model, but concentrate more on theory and concepts of unlevering and relevering. So this is about Unit 1. And if any delegates wants to ask any questions here, later we will have a question and answer session. At that time, you can ask. Let me go to Unit 2 now. See, this is the unit where many of you have doubts here. So when I say valuation of firm and valuation of equity, so we have, that is first one, net asset method. So in case of valuation of shares, net asset method. That is, there are three approaches once again here: taking book values, taking market values, taking replacement or liquidation values. So now one or two problems can be covered on net assets method of valuation of equity shares. So coming to earning capitalization model, that is, all of you know, that is PE ratio is equal to market price divided by EPS. So if you want to find out the market price of equity share, you can multiply PE ratio into EPS. So just explain only the theory part of earning capitalization model. And also even relative valuation model also, I think theory will do, and problems only on net asset method. And coming to the fourth one, shop method. Under shop method, we have theory as well as problems. So under shop method, the organization is divided into different divisions or sections, or what we call it as segments. Find out the value of each segment, then finally take the average of all the segments. So thereby we will come to know the value of the business, the value that is called shop value. So coming to discounted cash flow. So I think here all of you need to know discounted cash flow means how to find out the value of different securities issued. Different securities means, in case of redeemable debentures, how to find out the value of debenture. In case of irredeemable debentures, how to find out the value. In case of preference shares redeemable, how to find out the value. Irredeemable preference shares, how to find out the value. Coming to valuation of equity shares, for all these things we call it as discounted cash flow, because in case of debentures, you need to find out the present value of interest and face value of debenture. In case of preference shares also, present value of dividend received every year, plus also face value of the preference share. And in case of equity shares, we have different methods like how to find out, that is dividend capitalization and earning capitalization. These are the two methods to be covered. Under dividend capitalization model, no growth in dividend, normal growth in dividend, supernormal growth in dividend. So these are the types of problems to be covered in discounted cash flow technique with reference to equity shares. So, and again, adjusted present value, APV method, I think theory will do. Theory on APV method, its advantages and disadvantages. So let me summarize this. Problems. Teachers, remember this. You need to cover problems on net asset method, problems on earning capitalization method, problems on sharp method, and problems on discounted cash flow method, namely how to find out the value of debenture, how to find out value of preference shares, how to find out value of equity shares, under different techniques, like different levels, like no growth in dividend, normal growth in dividend, super normal growth in dividend. And of course, the APV method just cover only the theory. This is about unit 2. So in unit 2 also, problems are very, very important. Sharp method problems, and valuation of equity shares, multi-tier we say. When we use supernormal growth rate, it is called multi-tier rate. So that is problems on equity, and net asset method with three values, like when you use only balance sheet values called market value, book value. When you use market value, when you use realizable value, where we consider even liquidation expenses. So these are the three areas where the practicals to be 4 areas: net asset method, earning capitalization method, sharp method, discounted cash flow method for valuation of different securities, including equity shares. So coming to unit 3. Unit 3. Yeah. And majority is theory only. Majority theory. I think the teachers can concentrate problem on Stewart approach. Problems on how to calculate EVA, economic value added. So except EVA, the rest is theory only, like introduction to the value-based management, introduction to value-based management, and all these theories, Moroccan approach, Alker approach, McKinsley approach, and BCG approach, performance measurement and analysis, balanced scorecard. All these things, the materials will be available in CA, study materials on strategic financial management, CA final. You can refer ICA study materials, CA final. In ICA website, you will get this theory for all these approaches, and in the examination, section A, there may be 1 or 2 methods only, the meaning, or they may ask for section B also, any one of the approach in the examination. So coming to, I told you problems based on EVA. EVA, you'll get plenty of problems on how to calculate economic value added, like net profit after taxation minus capital charge. When we say capital charge, we mean investment into weighted average cost of capital. So now, by using this equation, we calculate EVA, economic value added, and we get lot of problems. If you refer corporate valuation and restructure of MBA question papers, you'll get lot of problems on EVA, and even in CA final study materials also, you'll get problems on how to calculate EVA. Problems on EVA. There you pick some problems from different material or question papers, solve them in the class, so that it is a compulsory question. Let us decide now itself. We will make it compulsory. That is problem on EVA from unit 3. And all others are only theory from this unit 3. So go to unit 4. Corporate restructuring And remember, this is completely theory. So corporate restructuring, meaning form of corporate restructuring. In what way you can restructure the capital structure, assets restructuring, securitization, sale and lease, financial restructuring, designing and redesigning capital structure. And of course, this we have covered in third structure and factors influencing capital structure, and also how to, that is optimum capital structure, etc. So certain aspects of the same can be repeated here. Designing and redesigning capital structure, restructuring of companies incurring losses, continuous, that is how to restructure the capital structure of those companies which are continuously incurring losses, and restructuring in the event of change in law, and of course buyback of shares. What are the latest provisions in the Companies Act 2013 and SEBI guidelines for buyback of shares? So these things to be covered in module 4 about buyback of shares. And remember, this particular unit 4, completely theory, and no practicals as such. Coming to last unit, corporate restructuring 2, and of course this is completely problems. So now you are supposed to, in one of the previous one, when I say corporate restructuring, mergers and acquisition is also one form of corporate restructuring. So here you need to cover in detail the meaning of expansion, how the companies go for internal expansion and external expansion, what are the forms of expansion like mergers, acquisitions, and consolidation, etc. So here you need to cover in detail reasons for mergers and acquisitions. Reasons. So you can refer, say, Advanced Financial Management, R.K. Sharma, Shashi K. Gupta, I think chapter number 38. Chapter number 38, you'll get lot of theory on mergers and acquisitions. Financial Management, R.K. Sharma, Shashi K. Gupta, chapter number 38, that is expansion and restructuring. Expansion and restructuring, you'll get complete material for this. Complete material. So the meaning, etc., and types of mergers like horizontal merger, vertical merger, conglomerate merger, etc. So types of mergers, and finally determining exchange ratio. So how to find out exchange ratio by using asset approach, how to find out exchange ratio by using EPS, earning per share approach, and how to find out exchange ratio and number of shares to be offered to the target firm by using market price approach. So exchange ratio determination, all these three methods. So this is once again, if you refer the corporate financial planning of R.K. Sharma, corporate financial planning, or you can refer at financial management, chapter number 38, expansion and restructuring. You'll get problems on this. So to cover more problems in the class, what you can do is go to 6th semester corporate financial planning question papers, right from 2016, 2015 till 2021, you'll get plenty of problems on plenty of problems on how to calculate exchange ratios and how to find out the number of shares to be offered and which method is best for acquiring company and how to calculate EPS before merger, how to calculate EPS after merger. So everything you can cover in detail about this last unit, namely corporate restructuring too. So mainly problems are determining exchange ratios, determining the number of shares offered, determining the before merger EPS, determining post merger EPS, etc. So this is a unit 5, which is very, very important, so that easy for students and easy for teachers also. You can concentrate more on this unit 5 so that students will not find any difficulty, especially the situation, a pandemic situation like this. So you should make them comfortable. So this year and next year, though we have this paper only for 2 years, and all of you make it convenient to the students. So concentrate more on unit 1, unit 2, unit 5, so that students will not face any problem. And even many teachers are still struggling what to teach, especially for this particular paper, namely Advanced Financial Management. So for all of you, this is the tips I'm giving you. Concentrate on first unit, problems easily you can cover. Concentrate on second unit, problems easily you can cover. Problems on third unit, only EVA. Problems on third unit, only calculation of economic value added. And problems on fifth unit, you have plenty of problems to be covered in the classroom for this particular unit. So coming to the examination point of view, what to be covered. So there are 5 units. There are 5 units. We can give 2 questions from unit 1 for section A, 2 questions from unit 1 for section A, and 1 question for section B, and 1 question for section C from unit 1. 2 questions section A, 1 problem either on time value of money or time value of money. You can have 1 problem, or you can give either profit maximization or wealth maximization or DuPont analysis or analysis of financial. So this theory can be given for section B. Problems means you can ask questions on time value of money, either discounting technique or compounding technique. And section C, all of you make it clear, weighted average cost of problem. Calculation of weighted average cost of problem from unit 1 for section C. So 2 questions section A, 1 theory or problem for section B, 1 compulsory question from weighted average cost of capital from unit 1 for section C. Coming to unit 2. Unit 2. Yes, sir. Please go to unit 2. Okay. Now here, once again, problems on either net assets method or shop method or valuation of equity by using supernormal growth rate. So only these 3 aspects where you can cover in detail problems, so that 1 problem can be asked from this unit for section C. Asset method, shop method, discounted cash flow method, their valuation of equity under multi-tier we say called supernormal growth rate in dividend. So coming to section A, one question again on this chapter, and for section B is also they can ask either a simple problem on earning capitalization method or a theory question on adjusted present value APV method or relative valuation method, etc. So one question for section A, one question for section B, one problem for section C. Problems I told you three areas. One is asset method, shop method, and discounted cash flow method. So these three methods. Discounted cash flow method, it is for valuation of equity shares. Go to unit 3. Yeah, I told you this is purely except EVA, the remaining are theory only. Questions may be asked for all the three sections. So better you can avoid section C from this, or in case if they ask section C, let them ask problems on EVA. So problems on EVA for section C, and one theory question for section A, and any one of these approach. Briefly explain, say Morricone approach or Alker approach or Kinsey approach. So like that, any one of these are short notes on balanced scorecard or short notes on performance measurement analysis. So these things can be asked for section B. Problem EVA method only for section C. And
excuse me, sir, can you repeat section B part, the questions, theory questions that could come?
Section B, briefly explain any of these approaches, any of these. Say for section B. For section C, problems on EVA method. Problems on EVA method. And section A, they can ask any small question on this. This is unit 3. Unit 4. Unit 4. Yeah. So I told you this is completely theory. So here, theory questions for section C from 4th unit. So let us concentrate on 2 marks questions. That is section A, 2 questions from this, and 1 question for section B, completely theory. Go to unit 5. In unit 5, we have scope for asking problems for section C, problems for section B also. If you refer the corporate financial planning, we have problems on mergers and acquisition even for section B and also section C. So if you refer the corporate financial planning, you'll come to know. So from unit 5, problems for section B and problems for section C on exchange ratio determination. And of course, even theory can be asked here, like what are the reasons for mergers and acquisitions, what are the different types of mergers, and we have other 2 aspects like leverage buyout and management buyout. So these are the theory concepts here. When one company acquires another company by taking debt is called leverage buyout. So if the managers are employees of the organization, if the company is under losses, if they buy and if they develop, this is called management buyout. So these are the theory aspects. It's a very big chapter, but here though it is just 2 lines of syllabus, but it's a very big chapter. So that is why I told you, you just refer Financial Management by R.K. Sharma, chapter number 38, you'll come to know the depth of this unit, corporate restructuring too. There, lot of theory is there, plus problems on exchange ratio determination, To cover more problems, I told you, you refer corporate financial planning, previous 6 semester question papers, you'll get lot of problems on exchange ratio determination. So from this unit, questions will come for all the 3 sections. And of course, in section A, only theory, section B and C, either theory or section B, theory or problems, section C, only problem. Yes, now we will interact. Later I will conclude my session. It's now open to audience. And I hope all of you, many of you have many doubts here. I will try my best to simplify and make you to understand how best you can teach this particular subject to the 5th semester BCom students. And of course, the same syllabus is there even for BBA 5th semester.
Good afternoon, sir.
Yeah. Now, it's open to the delegates. You can ask whatever the queries you have on this.
Sir, could you please repeat this? Depth to be covered under determining exchange ratio, sir?
Exchange ratio, how to calculate exchange ratio by using assets approach, net asset value per share approach. Okay.
Okay, sir.
Again, how to calculate exchange ratio by using EPS, earning per share approach.
Okay, sir.
Then, how to calculate exchange ratio by using market price per share approach. After knowing the exchange ratio, you should also know how many shares to be offered to the target firm. So, calculation of number of shares. Then, before merger, how to find out EPS. After merger, how to find out EPS. Because of merger, is it gain to the acquiring company or gain to the target company? So, all these things to be covered.
Thank you, sir.
Good morning, sir. Good afternoon, sir.
Yeah.
Sir, myself Rashmi. I wanted to know, in viewpoint analysis, do we have to cover problems, sir, or
Only theory.
only theory?
Yeah.
Sir,
You should
again, one more.
know what are the things which are contributing to increase the earnings to equity shareholders.
Okay, sir.
Things
One more.
which are necessary, where you should concentrate more so that your company's earnings of equity shareholders increases. This is invented by DuPont company. That is why it is called DuPont analysis. Only theory.
Okay, sir. One more question, sir. In last chapter, sir, in determining the exchange ratio, even the stated ratio has to be covered, sir.
Sorry?
So, in chapter 5, sir, that is corporate restructuring 5 in mergers and acquisition, in determining the exchange ratio, there is one concept, sir, that is a stated ratio for every 3 shares or 2 shares is offered. So that concept is also have to be covered, sir.
No, usually they used to give 2 balance sheets, one acquiring company, one target company.
Yes, sir.
Find out value per share of target company, value per share of acquiring company.
Yes, sir.
Using net asset value per share, you find out exchange ratio. Based on that, find out how many shares are offered to the target firm. Similarly, earnings after tax divided by number of shares, we get EPS.
Yes, sir.
So, you take EPS of target firm, EPS of acquiring firm, calculate exchange ratio. Based on that, find out how many shares to be offered. Similarly, market price per share. So, market price, I told you in the second unit, market price is equal to PE ratio into EPS. Market price means PE ratio into EPS. Okay. So, now what you should do here, if market price is not given, PE ratio into EPS, you find out market price. Market price of target firm divided by market price of acquiring firm, you'll come to know the exchange ratio based on market price. And using that, find out how many shares are offered. So for this, you can refer previous corporate financial policy question papers of 6th semester BCom. Or if you want to go little further, You go to MCOM first semester, Advanced Financial Management, Bangalore University question papers, you'll get lot of problems. In every year, you will find problems on mergers and acquisition. So that either MCOM, AFM question paper or BCom, corporate financial planning, corporate 6th semester, corporate financial planning question paper, you'll get plenty of problems on how to calculate exchange ratios and how to calculate pre-merger EPS and post-merger EPS, gain on merger or loss on merger, etc.
Sir.
Okay.
Hello, sir. Hello.
Yes.
Sir, good afternoon, sir. Actually, I have one question regarding Chapter 2, Corporate Valuation.
Okay. Yeah.
Actually, when the syllabus discussion for BBA happened, it was told that we can give DCF method for corporate valuation and not valuation of shares. And it was told that we'll ensure that it is same done for BCom also. But now, actually, in our college, I have solved all the problems of corporate valuation, not stock valuation or DCF.
No, in the syllabus, it is clearly given valuation of equity. If I say net asset method, you take the market value of assets or book value of assets, deduct outsiders' liabilities, you'll come to know the assets available to shareholders. Then if preference shares is there, you deduct, you'll get the net assets available to equity shareholders, divide the same by number of equity shares, you'll come to know the value of equity share. This is what mentioned in the syllabus under net asset method. Instead of book value, you can use market value. You can use liquidation value, etc. So these are different. So that is what I am telling you. Don't bring a BBA here. Here, as per this unit 2 here, you solve problems on net asset method. You solve problems on shop method. You solve problems on discounted cash flow method. And I told you discounted cash flow method, it is not only for equity shares, it is for debentures, preference shares, equity shares. Under equity shares, there are 3 types of problems: no growth in dividend, normal growth in dividend, supernormal growth in dividend. The rest you can cover only theory.
Okay, so there is no necessary of covering DCF through using free cash flow and all those, that procedure. Free cash flow to the firm.
It is not there, right? Just see the syllabus. If you feel that
No,
is...
sir, initially it is there, both valuation of firm and equity, so that's why I got confused, sir. Initially they have mentioned both, right? Valuation of firm and equity.
No.
So that's what I confused.
No, that is only the introduction part. The next comes net asset method, earning capitalization method, relative valuation method, shop method, discount. So only these things we have to cover, not the title.
Sir, in DCF method.
No,
Sir,
don't ask me BBA. You ask only BCom.
Sir, for chop shop, can you suggest few references, sir, like for doing the sums?
Right. You can go to CS Strategic Financial Management. Okay, Strategic Financial Management, and how the business is divided into different sections, and how the capitalization value is calculated. Capitalization value is calculated for each division or segment, we say, for each segment. After knowing the value of all the segments, you make the average. So, I think if you want some problems with answers, I will share later.
Sir,
Yes, sir,
please share.
Okay.
Sir, I have one doubt. In earnings capitalization method, you told it can be asked for a section B question, that is for 5 marks.
Which unit?
Second unit itself, sir. Corporate valuation.
Earning capitalization, I told you, market price per share is equal to EPS into P ratio, right? You just refer the CA materials, you will understand. Still, if you have any
Yes, sir.
doubt, we will discuss later. Let us give chance to others to ask any doubts. Yes.
Good afternoon, sir. Sir, do we have any
Unit
section C
4,
questions from Unit 4,
I
sir?
told you just now.
From Unit 4,
Yeah.
that is
Unit 4, since
corporate
it is
restructuring
completely
1.
theory, let us ask 2 questions for section A,
Yes, sir.
theory questions, and 1 for section B.
Okay, sir.
I
Okay,
think
sir.
since it is
Sure, sir.
completely theory, we will concentrate only for section A and B. And 2 questions, of course, for
Okay,
section
sir.
A.
Sir,
From
okay, sir.
question
Thank you so much, sir. Sir, any reference for
from
EVA problem,
Unit
sir?
1, 2 questions for section A. Unit 4 also 2
Okay.
questions for section A. From other units, one
Okay, sir.
question for section A.
Okay, sir. Sir, any problems on EVA method, sir? Which material we have to refer for EVA? Because we don't have any particular.
EVA, I told you, no. We get lot of problems. Even CA material you get, and financial, corporate valuation and restructuring of MBA finance. MBA finance
Okay,
from
sir.
Bangalore University. In every
Okay, sir.
question paper, you will get problems on EVA, and even in wherever finance specialization is there, so I think you can refer some question papers of Bangalore University. You'll get problems on EVA method.
Okay. Thank you, sir. Thank you so much.
Sir,
If you want,
regarding
while sharing some of the problems on shop method, I will share few problems on EVA also.
Sure, sir. Thank you, sir.
sir, DCF method problem, can you share it, sir?
Sorry?
DCF method problems.
I'll see. If I have, I'll share.
So in the DCF method, you need to solve value of equity also, value of debenture also, value of preference shares also, sir.
Yes. I will do one thing.
Sir.
You refer my financial management subject, unit 3, I think, corporate valuation. Corporate valuation or valuation of securities or something, chapter heading. There you will get how to find out the value of debentures, how to find out value of preference shares, how to find out value of equity shares, and each level, like no growth, single, that is normal growth, multiple growth. In my textbook, you'll get materials for that particular unit.
Corporate valuation. Okay.
Excuse me, sir.
Yeah.
Related to this discounting our
Yeah.
topic, sir, it has been discussed in
Yes.
IFM also, sir. Can we refer
Sorry?
that one? In International Financial Management, the book written by you, sir,
No,
the
I
same
think
topic has been covered there also.
Maybe.
Okay, sir. Can we refer that?
Yeah, no, same thing is there.
Yes, sir.
Okay.
Good afternoon, sir.
Good afternoon.
Sir, I just wanted to know the syllabus which has been framed, no, sir. I handle not for BCom regular, but I handle for BCom for accounting and finance group. So my syllabus is almost matching 80 to 85%. It's matching. So can I go ahead with the same orientation whichever you have done, sir?
For which course it is?
BCom accounting and finance, sir. But my syllabus is matching. My syllabus is matching.
If contents are matching, you can refer whatever the materials I have told. But the examination, we can't tell, you give problems only and this like that. But for teaching purpose, you can refer.
Okay. Fine, sir. Yeah. Thank you, sir.
Yeah. Yes, any other questions?
Sir, what has happened is that, good afternoon, sir.
Good afternoon.
Yeah. Sir, regards to Vision publication or Himalayan publication, there is no such book, sir. So if we go to the CA finals book, the problems what there and the syllabus and the content there is huge for a BCom, I feel, sir.
No, that I'm not the authority to say about it, because when we framed this syllabus, we thought it will be there for at least 5 years. But because of NEP, immediately after 2 years, this syllabus will vanish. So the authors and even publishers, they are not ready to publish any materials according to the syllabus, because once if the syllabus is no more useful after 2 years, even they don't want to publish and make loss by publishing these things. If the subject would have been continued for few more years, even I would have written the textbook of advanced financial management. So maybe because of this, so you have to gather for this year and next year information from different sources, and you have to manage yourself.
Okay, sir. So thank you so much. Please share all the questions what you have, sir, because it will be helpful for us to teach here.
Definitely.
Yeah. Can you give us some mail ID, or how will you share us, sir, through document?
Yeah, I will give my mail ID. You can
Okay.
use it.
Tell us, sir.
Mariappa_B@yahoo.com. Mariappa_B@yahoo.com.
Okay, sir. Thank you so much, sir.
Thank you very much, dear audience. Sir, is there any e-content available on a subscription basis, sir? Could you please refer to the audience? Sir, am I audible?
Yeah.
Sir, is there any e-content available on subscription basis, sir, regarding AFM?
Sorry?
The soft copy of the textbook, what you have written, is there any e-content available, sir?
I will give you my mail ID, right? Whatever I have, I will share.
Oh, fine, sir. So let us conclude the session, sir. I hope so. It's very helpful for all the audience. So thank you very much, sir, for sparing time with us, sharing the knowledge, and also you have given us the clear picture about what to be covered under advanced financial management. So it was a happy learning for all of us. Thank you very much, sir.
Thank you.
Yes.
So once again, I thank the organizers for giving me this opportunity to share my experience, and I personally thank Dr. Anil Kumar for inviting me for again this second session, that is a second day session to share my experience. I thank every one of you for your active interaction in this session. So we will meet in the next semester again.
Thank you.
Thank you. Yes, ma, conclude.